Hola mi gente, and welcome back to the We Are Investing channel, a channel that is dedicated in investing and personal finance. On this video, I want to go over a penny stock that just exploded today. Massive returns. The stock was actually halted. So let's dive into the company, let's take a look at the charts, and I'll give you my overall opinion. And I'm also going to talk about another stock that's in this sector and might be a better bet considering this most recent run up. So I'm going to give you options here, guys, but as always, you have to do your own due diligence. I really recommend that you look into the companies that I'm talking about today on your own before entering into any position. The stock we're talking about is CPSH. It trades on the NASDAQ, and today it jumped 113.75%. The current share price is $6.84. Now, if we look at this stock on the max chart, we can see that we are well above any other highs that this stock had since 1995. So the stock has been very flat. It hasn't been a good performer. It's been a crappy stock until today where it really shot up. Is this run up justified? I don't know, but we're going to talk about the company. I'm going to put it on your radar, and we're also going to talk about another company that might just be a better bet. Now, one reason why this stock might have shot up is because of the volume and the free float. Volume is 3.2 million and the free float is 8.15 million. That is a huge chunk of the free float, and that creates a recipe for high volatility. That could be good or bad, but in this case right now, it is good because the stock price increased a ton. However, you need to be extremely cautious here because if you jump in, it could drop really fast and you could lose a lot of money really fast. So real quick, this company is in the metal matrix composites MMC market. And according to a study, which I'm going to link in the video description, I highly recommend you check it out if you're interested in a long-term investment. But according to that study, it is predictable to witness sustainable evolution over 2030. Now, what this company does, and it is an ESG play, environmental, social, corporate governance. It's a ESG play because it deals with hybrid and electric automobiles and wind turbines. Now, it doesn't actually make automobiles or turbines. It provides a product that's used in those products. So with that being said, this is down the supply chain. This is a picks and shovels kind of play. This isn't going to generate massive returns as if it was the leader in wind turbines or the Tesla of electric vehicles, but you could get good returns because if it's a solid company that's still within the supply chain of those ESG plays, then that will generate revenue, help the top and bottom line of the company, and that's going to trickle into the pockets of the shareholders. But ESG is definitely the craze right now. Everybody's searching for your next ESG play. Everybody's focused in the environmental portion of ESG, so people should start looking at the S and G portion as well because those might be undervalued, and it might take time for investors to realize, hey, everybody's looking for the environmental plays. What about the social, and what about the corporate governance as well? But anyways, according to this article, some key players in this market are Materion Corporation, CPS Technologies Corporation, the stock we're talking about today, and some others. So the vision is there, but what is the company's track history? Are they a good company? Have they proven themselves before? Do they use their money wisely? Are they growing revenues? These are very important questions because it's not just about being in a certain sector. It's about having a good company that is managed well. If you look at revenues for the fiscal year 2019 were 21.47 million US dollars. Revenues for 2015 were higher than that. So this company has not grown revenues past those levels since, well, ever. The highest in the last 5 years that I can see occurred in 2015 with revenue of 21.76 million US dollars. And if we take a closer look in the most recent quarter, revenue was 4.45 million. Very small revenue on a quarterly basis. And that's only up 1.49% from the prior quarter. So I do not expect huge revenue growth in 2020 as well. Maybe in 2021, if we get a massive infrastructure bill that really helps out this company, they could see a jump in revenue. But that is still a huge if. And I do not want to get political here, but I still think it's going to be tough to pass a ginormous infrastructure package because we spent so much money in the stimulus packages. And even though the House, the Senate, and the presidency are blue, it is by slim margins, and there are some moderate Democrats in there that might not be in favor of spending a ton of money given how much money we already spend. So that $2 trillion or whatever package that has been said might not pass. So that is always an if, and that is a consideration that you have to take into place. And one other thing that I want to talk about for this company, the fact that the share price is so high right now, if it remains high, they're going to do an offering, they're going to dilute, and they're going to raise capital. But this company has not shown that they have a good return on equity. And return on equity has been negative since 2015, maybe even longer. That is all I can see on Webull right now. And one other thing with CPS Technologies that I found extremely bizarre, the investor presentation hasn't been updated since 2018. That is not a good sign in my personal opinion. I think websites do matter, and the way that you maintain your website is very important, at least for me. I don't want to go to a company's website that seems like it's very outdated. They do not care about its appearance, and they do not update their investors with progress with real presentations. That is a red flag in my personal opinion. So honestly, it's not that thrilling to see a company that has not increased revenue since 2015, has not had a positive return on equity since 2015, is not profitable, and really hasn't done much to prove themselves. So even though they might be in a sector that could grow, I'd rather take my chances somewhere else with a company that has a proven track history, has grown revenues, and a company that seems to have their shit together a little bit more and might be a better place to park your money for an investment. And I think that company might be Materion. This company was also provided in that same report. This company right now trades at a share price of $68.33. In the last year, it's up 14.67%. And over the last 5 years, the stock is up 179.58%. This company, on the other hand, has had positive return on equity since 2015. In 2019, they returned 8.70%. This company has been growing revenues, although not to the levels of my liking, but since 2015, they have grown revenues. Revenues in 2015 were $1.03 billion. Revenues in fiscal year 2018, which are the high, were $1.21 billion. And in 2019, you saw a negative 1.85% drop in revenue. Now, this company is in the same sector. They deal with metal matrix composites, but they also deal with some other stuff as well. And as stated in the other company, these materials are used for aerospace, commercial, and performance automotive, satellite structures, and optical systems. But I also want to bring your attention to a company that they acquired this year, which I also think it has huge potential. The products that they create are used in things that I think you might find interesting. This acquisition expands their portfolio to serve attractive markets with exposure to key mega trends. We got life sciences, consumer products, we have industry, including laser scanning and marketing system, and we have automotive, adaptive cruise control, night vision systems, and gesture recognition and control. And as stated, the products are used in that adaptive cruise control. This is huge for autonomous driving, full self-driving. It's also used in driver assistance cameras. Same kind of thing, huge for autonomous driving. It's also used in Earth observation. So we're talking about satellites, we're talking about space stuff. And who doesn't love space stuff? And we're talking about night vision systems here as well for your car. This is going to be very important as well because people drive day and night, and cameras do not work well at night without proper night vision systems, and this could help with that as well. And we also have products in life science like microscopy. So these products are used in industries that are mega trends as stated in the investor presentation. So with that being said, guys, I just showed you two companies in a sector that might take off. To be completely honest with you guys, I am not that familiar with these products. I have to do more due diligence myself. It was just brought to my attention today. I wanted to get a video out to you guys so that you can do your own due diligence as well, because we're all looking for that next ESG play. We're all looking for that next stock that's going to be a good long-term investment. Hopefully, I was able to provide value to you. If I was, please consider hitting that subscribe button, ringing that bell, and smashing that like button. Also, please be aware that there is a Patreon for this page. You get access to a Discord server of around 300 members right now, and you also get to follow the portfolio in real time. Whenever I open or close a position, I post on the Patreon. So if I open up a position in either of these two stocks, you will be notified if you join the Patreon. A link is provided down below. But you know the deal. It's been real. It's been fun. It's been real fun. And this is We Are Investing, and together we are invincible. See ya!